Welcome back to Bitcoin Dorks, where we bring you the latest updates and insights from the world of cryptocurrencies. In today's video, we'll be discussing the recent report on Tether's access to the US banking system using Signature Bank. Tether, a stablecoin issuer, has been the subject of scrutiny for years, and this latest revelation has raised eyebrows. So let's dive in and explore what this means for the crypto industry. Before we discuss the recent report, let's briefly talk about what Tether is. Tether is a stablecoin that is pegged to the US dollar. It was created to provide a stable alternative to volatile cryptocurrencies. The idea is that Tether is backed by real US dollars held in reserve, making it a reliable digital currency. According to a recent report, Tether had accessed the US banking system using Signature Bank. This was revealed through a Freedom of Information Act (FOIA) request by Jacob Copley, a student at the University of Michigan. Signature Bank is a prominent bank in the US, known for its strong compliance and risk management. It has been known to work with several cryptocurrency-related companies and has a reputation for being a safe haven for digital asset businesses. The report has raised concerns about Tether's banking relationships and the transparency of its operations. Tether has been under scrutiny for years, with critics questioning whether its stablecoin is really backed by real US dollars. Tether has responded to the report, saying that it is inaccurate and that the stablecoin issuer does not use Signature Bank. Tether has also accused the FOIA requester of having an agenda against the company. The controversy surrounding Tether has been ongoing for years. Critics have accused the company of operating a fractional reserve system where it claims to have a one-to-one backing of US dollars, but in reality it may not have enough reserves to cover all the issued Tethers. Tether's impact on the crypto industry is significant, as it is one of the most widely used stablecoins. Its controversy has also been a source of concern for the industry, as it may affect the confidence of investors in cryptocurrencies as a whole. The Tether controversy highlights the need for transparency in the crypto industry. As the industry continues to grow, it is crucial that there is transparency in the operations of digital asset companies. This will help to build trust and confidence among investors. Despite the legal hurdles and controversies surrounding Tether, the stablecoin has remained the most popular and widely used stablecoin in the cryptocurrency market. Tether's market dominance has even prompted other players in the industry, such as Circle and Coinbase, to launch their own stablecoins. However, Tether's lack of transparency and regulatory compliance has also made it a subject of concern among investors and regulators alike. This is not the first time Tether has faced regulatory scrutiny. The company has been under investigation by the New York Attorney General's office for its alleged cover-up of an $850 million loss. The investigation led to a settlement in February 2021 where Tether agreed to pay $18.5 million in fines and agreed to provide regular reports on its reserves. Tether's recent access to the US banking system is seen as a significant step towards legitimizing the stablecoin and gaining the trust of investors and regulators. The move is also expected to have a positive impact on the broader cryptocurrency market, as Tether's role as a key liquidity provider makes it an important player in the industry. However, Tether's access to the US banking system is unlikely to silence its critics, who have raised concerns over the company's lack of transparency and regulatory compliance. Some experts have called for a more comprehensive regulatory framework for stablecoins to prevent them from being used for illicit activities such as money laundering and terrorism financing. As the cryptocurrency market continues to mature and gain mainstream acceptance, regulatory scrutiny is likely to increase. The fate of Tether and other stablecoins may ultimately depend on their ability to comply with regulatory requirements and gain the trust of investors and regulators alike. Only time will tell whether Tether's recent access to the US banking system will help or hinder its efforts to gain legitimacy in the eyes of regulators and investors. In conclusion, the recent news that Tether has gained access to the US banking system using Signature Bank is a significant development for the stablecoin issuer. It further solidifies Tether's position as one of the most widely used and trusted stablecoins in the crypto market. With access to the US banking system, Tether can now offer even more stability and transparency to its users. However, this news also raises concerns about the potential for Tether to be subject to increased regulatory scrutiny. As the crypto market continues to mature, regulators are paying closer attention to stablecoins and their potential impact on financial stability. Tether's access to the US banking system could attract regulatory scrutiny, and it remains to be seen how Tether will navigate these potential regulatory challenges. Thank you for watching another episode of Bitcoin Dorks. We hope you found today's topic informative and helpful in your journey through the world of cryptocurrencies. If you have any questions, comments, or suggestions for future videos, please let us know in the comments below. Don't forget to like and subscribe to our channel for more updates on the latest trends